What is up, everyone? Welcome back to the trading world. Today we're going to be reviewing the market for Friday. So yesterday I spent a little bit of extra time this morning reviewing the market to make this market recap even better for you guys. So hopefully you like the content today. Guys, price action was so beautiful. And if you stick around to the end of this market recap, you will understand exactly what I mean. Guys, there's opportunities every single day. We just have to lock in, and we will find these setups. Also, if you're new to my channel, my name is Jake, and I cover the market daily. Specifically, I cover how you can trade futures contracts on NASDAQ. And there's some pretty beautiful trades you can take every single day. I'm going to show you exactly how you can take them, no fluff. I'm going to cover trades from Twitter and also trades that I noticed you could take as well. Guys, let's jump into the market. So, starting out in the morning, actually first, let's talk about some news. We got Inner Circle Morpheus winning the Forex division of the Robbins Cup. So we got an ICT Trader winning the Robbins Cup, guys. Now, ICT is not winning, but look at these people that are ICT traders that are winning, right? It makes you think ICT, he's up to something. Because all these ICT students are winning. So why isn't ICT winning? Just a thought. Dodgy's like, you might be able to stop now and win. So that's kind of funny. But anyway, let's actually cover the market. So that was a little bit of news. Going into the day, the market chops around. So during this time, this is just a giant accumulation range. So the market's going to want to come back and run through this. So whenever you see this, keep that in mind, that this is where stop loss orders are going to be. The market's going to want to come back here. So let's mark this out as our accumulation range. And there's actually two different models that actually happen. We get a market maker sell model before the market opens in the pre-market, and we get a market maker buy model and once the market opens. I'll show you exactly how you can trade both of these. So let's start out with this one, because this was the trade of the day in my opinion. It was actually really, really nice. We have this 1 hour fair value gap within discount of this energetic price leg up. So if I measure this from discount to premium, you can see that this fair value gap is within discount. So then on the 5-minute, we end up getting a change in state of delivery right here. And look at how perfectly the market responds to this change in state of delivery. Very, very cool. I'm going to drag this over. Here we have, this is our 1 hour gap. And from here, if I measure out the manipulation from the bodies, you can see we go right up to that 4th standard deviation. So pretty cool. But once again, a lot of time, like you're gonna want to take profit. I take profit half off at 1R, and then usually the rest off at 2R, and that would make sense given where the highs are in the market, because this is back at all-time highs. This is where people are gonna get stopped out, right? So I would take profit essentially all off probably here. That's just what I would do. See, that's right around that 2nd standard deviation. So if you don't know, you can measure out the manipulation leg, and that's going to give you projections of where the market's going to want to go. So very, very cool. So we retest this 5-minute change in state of delivery here. And you'll also note what else confirms this as a market maker model. We have SMT here. And the cool thing about this SMT, So NASDAQ makes a lower low. So S&T is when one asset makes a higher low and one asset makes a lower low. That's an S&T, and that's confirmation that the market's going to reverse. So we have S&T here, 1 hour for value gap. Then we get this 5-minute change state delivery. You enter here. Honestly, this one, I would put stop loss probably at the end of this wick here. And then you see this was a really, really nice trade. Very, very good trade. Very obvious accumulation, manipulation, distribution. Then, S&T with this low, 1 hour for value gap, 5-minute change state delivery, and the rest is history. Now, the cool thing about this is there are a lot of different ways you can take this, right? Not only was this a 1 hour for value gap and 5-minute change state of delivery, but it was also an inverse for value gap. You can see that right there. Now maybe you wait for a little bit of a retrace after the inverse for value gap because we closed a little high. But either way, you could take this however you want to. I'd probably wait for a little bit of retrace if I was taking this as an inverse for value gap. Now, I want to talk about how JadeCap sees this, because this is the guy that got the $3 million payout. And it's actually really, really fascinating because notice where the manipulation happens. Again, the same exact thing as yesterday. And I'll go back and look at yesterday very, very briefly. But we have midnight and we manipulate. The manipulation happens right below midnight before we expand the rest of the day. And remember, we have S&T with that low. So I'm going to pull up that midnight time. So if you want to figure out which way we're manipulating, a lot of the time, midnight will be very, very helpful to figure that out, because the manipulation will either go below midnight if we're bullish, or the manipulation will go above midnight if we're bearish. So here you can see midnight, and just look at how perfect this is, right? S&T with this low below midnight, and then it sponsors distribution. Look at the exact same thing that happened yesterday. Like, this is the exact same thing. We have midnight here, and what happens? We get S&T with this low, and this sponsors the move in the opposite direction the entire rest of the day. How sick is that, right? Here you can see there's the S&T, right, with this low. So very, very cool. It goes to show this guy got the $3 million payout. He might know a thing or two, right? He might know how the market moves a little bit. But yeah, accumulation, manipulation below midnight with S&T, inverse fair value gap, changes to delivery. We backtest that perfect area right there, and then we distribute higher. Another way you could have taken the same trade conceptually is this was actually a 2022 model as well. We have a sweep of that low. We break this high, right? We get a clear break above this high. And then if I pull up where I mark this out, because I don't want to have to draw it out again, you can see we sweep, break these relatively equal highs, and then we come back, test that fair value gap. That's your high probability 2022 fair value gap. You could actually probably put your stop loss at this low, whatever the most recent swing low was. And then you can see we distribute up, and we especially start to aggressively go higher during our key time. This is the macro time. So this is when we aggressively start to expand. It's during the macro. So that was one way you could have taken it. And you can see Tanja takes it like this. So that's very cool. Retest of that fair value gap, and we expand super aggressively towards our drawn liquidity, which was these highs over here. So let's get away from yesterday. We're kind of done looking at that. And then yeah, very, very precise stuff, guys. Very, very precise. And as well, you could have taken this using this 15-minute fair value gap. So we have this 15-minute fair value gap in discount. 15-minute fair value gap with S&T. And then aligned with the, we have a liquidity sweep of these lows. And then we get this 1 minute change of state delivery. You can mark this out in however way you want, really. You can mark it out like that. You can mark it out like that. And either way, we expand off of that. And same thing. The 15-minute, 1 minute model works the same way. So, yeah, same exact thing. You target these low resistance highs here, or these triple equal highs. Very, very nice. Let's look at some more trades from other people. Trying to figure out, do I want to go look at the afternoon yet or not? Let's look at what happened in pre-market first. So, like I said, this was a market maker sell model in the pre-market. And we get a sweep, break of structure, and then this fair value gap here is that 2022 fair value gap. You'll note that it's chilling right at equilibrium of this price leg, or right in premium. So if you're taking this as a 2022, you'd enter in the fair value gap, stop at the high. And this is such a good liquidity pool. It's really hard to go too wrong with this. And you can see we run all the way to those lows. That's a 2.7 to 1. But you could also have taken this as a flow state. Now, there wasn't really a 15-minute key level. It's the only issue I have with this. But you'll note that this is a 1 minute change state of delivery. And if you measure this out here, and I'm going to measure it out from where the actual displacement starts, that's, in my opinion, you want to measure the displacement, the move with displacement, right? And you can see how perfect we go to all of these standard deviations. First one, second one, third one, and fourth one. And we run back through that accumulation range. So very, very cool. Now, let's keep moving forward here. Let's go to the afternoon. First, I want to talk about this trade from Dino here, or DNO. Really, really nice inverse fair value gap. We have delivery from a BPR, and then we inverse this. And we have low resistance highs up here. So we close above this old fair value gap. And you can see I have this marked out here. Look at how beautiful this is, guys. Higher time frame fair value gap, BPR, and then we get this really nice close above this old fair value gap. That's where I would enter, stop loss at the low of the candle that created the old fair value gap. And you can see we run up to these low resistance highs here. And for me, this is one of those situations where break even depends on your own personal back testing. For me, I know this is an external gap here, but I'm anticipating us to break it because of liquidity, because this is such a good liquidity pool. So I'm not going to go break even until we start to tap that liquidity pool, and then I go break even, and then the TPs all get hit. So that's how I would take that. And you'll note as well, the same idea happened with a flow state. We have SMT, sweep, change state delivery. So 5 minute gap. Actually, this was a 5 minute BPR. Haney and I discovered that afterward. And then we get this 30-second change state of delivery. And once again, we run back up to these low resistance highs. And there was also SMT there, so that was cool. And then we have this trade from Amos. So this is a trade that Amos took, and it was a loss. Says not how I wanted the month to close out. And I was doing a little bit of digging, and the reason this trade lost is it was actually against a higher time frame sell model. And it was actually a new model that I'm talking about in my newest video that's going to come out. It's still just a market maker sell model, but it's specifically with a rejection block. When you have SMT and you have a rejection block. And this is the model that, if you guys know Powell trades, he's like a really, really good trader. I'm pretty sure he trades this model. And so basically the way that it works is you take a rejection block, which if you guys don't know what a rejection block is, it is a super long wick of a high or a low. So this is a rejection block right here. So right here, and you can see how we come up into it and we reject. So we reject, it's basically just a wick. So a rejection block is basically just a long wick of a swing high. And what you really want to see with this model, so it's called the Phoenix model, and it's just market maker sell model with a rejection block. What you really want to see is you want to see SMT. So you can see S&P makes a higher high while NASDAQ makes a lower high. So we have SMT, so that's step one. We have our rejection block, that's step two. Now we go on to our aligned time frame. Oh, step three, we have our liquidity sweep. Now we go on to our aligned time frame, which is the 30-second. And we mark out our change in state of delivery. Here you can see there's that change in state of delivery. You can mark it off here too if you want to, whichever you want to do. And so 5-minute rejection block with SMT, with a liquidity sweep. And then if I measure out standard deviations, now actually this might have been better done like that. Yeah. So this is better used as this change state delivery right here. And I just go like that at the high. And look how perfectly we go to that fourth standard deviation. Perfect. Boom. So we have SMT, liquidity sweep, 30-second change state delivery, and you can see how precisely we react off of that. Stop loss at the high, and we go right down to TP1. I'd take half off at the first standard deviation, and then the other half at the second standard deviation. And like I said, my RR is the same as my standard deviations because I just put my stop loss wherever I measured the standard deviations from. So if I had it like that, we go to that fourth standard deviation. And yeah, I would be out here, but I am just showing that the models will end at the fourth standard deviation. So we go all the way down to the fourth standard deviation here. And boom, there you go, 4-1. So doubt Amos is watching this, but bro, this was against a higher time frame SMT with a rejection block. And those models, so they're called the Phoenix model, and those are like stupidly good. Those are stupidly good high probability trades whenever you have SMT with a rejection block. Those work really, really well. So Amos, that's, in my opinion, that's why this failed. So yeah, what else do we got here? We got this from Hydra. He takes this as an inversion. I don't know where he gets his entries sometimes because he enters before this candle body closes. Personally, If I was taking this, I would wait for a retrace a little bit. But this ends up working out for him. So good job, bro. Good job. We have... Okay. Like I was saying in the morning, in the pre-market, we have this market maker sell model. And we push up into what Ash calls it is a breaker for value gap, but I personally don't see the market in breakers and for value gaps. I just look at the market in terms of buy and sell models. So I just saw this as a 1 minute change state delivery. I forgot if I covered this yet or not, but 1 minute change state delivery, and then we expand lower off of that. So yeah. And we go run back through this accumulation range. Then, let's see what other trades we got in here. Oh, this 5 minute inverse for value gap was nice. We have SMT, once again, 5 minute BPR, sweep out this low, we get this close, and we run up to those highs up here. Then, let's see. Here you can see this model again. Look how perfect this is, and look at how we backtest OTE before we get the change to the delivery. Just so beautiful, man. I think we've covered almost everything, guys. Oh, this is cool. From JCap. Quarter ends literally... This is so cool. Quarter ends in a few days, and look at how we're closing, guys. We're closing, essentially getting a close above all-time highs. We might be going to 30,000 this year, guys. This is crazy. And then... lastly, in the afternoon, we get possibly one of the most textbook market maker buy models I've ever seen, where we have a discount 15 minute for value gap, 1 minute change state delivery, we retest that, and then we expand the rest of the day. And yeah, I don't know if anyone's watching anymore, but if you are watching, I just really briefly, I want to cover a discovery I made that I thought was pretty cool, which is that you can actually measure out change in state of delivery using the candle that sweeps the low. So this is something I discovered. So this is only for the people that made it to the end of the video, but I've noticed this is incredibly precise, where see how this candle is the one that takes out that low? You can actually measure out change in state of delivery with this candle. And I learned this from the secret information that's in my Discord that I'm still working on putting together. So I don't know if anyone's watching anymore, but the people who are, you get all this extra cool information. So I'm still working on putting together this Discord, but you can get change state of delivery if you have a candle that takes out a low and then you need to close back up. That's actually, it's like a different kind of change state delivery, but you can see here that it can be used as change state delivery if it makes sense in the context. So here's that same exact situation where we sweep out the low and then we get a close above this down close candle. And guys, if this might be one of the most precise things I've ever seen, but if I measure out standard deviations, it's actually kind of perfect. First standard deviation is hit perfectly, second is hit perfectly, third is hit perfectly, fourth is hit perfectly. And this candle is significant because this is the candle that takes liquidity. So entry right here on the change state delivery, and then guys, we go run all that liquidity. I just wanted to share this with the people who made it to the end of the video because I thought this was really, really cool. And we go right to that fourth standard deviation. Once again, 15-minute fair value gap, liquidity sweep, 1 minute change of state of delivery, and then we fly up all the way to go run all these highs. And we go to that fourth standard deviation, measured using this candle here. How sick is that? Anyway, I think that about covers it for the video today. A lot of cool, fascinating trades. Oh, also, this was a 2022 model here. I don't think I covered that. Really quickly, let's cover that. So once again, liquidity sweep, break of structure, retest of this fair value gap at equilibrium, and the rest is history. We go run those low resistance highs. So anyway, guys, that about covers it for today. Hopefully you enjoyed this video. Let me know how I can make these better. I'm doing my best. Sometimes I might overcomplicate things. I'm really trying not to. I'm trying to hopefully make it so anyone can understand it. But sometimes, you know, it's hard to film a full-length market recap and cover every little detail. So I'm getting better, but it's just going to take some time for me to keep getting better. I will see you guys in the next one. Peace out.